We're still at the largest mining show in the world, PDAC 2015, and joining me now is Adrian Day of Adrian Day Asset Management. It's our yearly reunion. Adrian, good to have you back.
Well, thank you for having me.
I guess my first question is, are things better?
You know, I think it depends what you mean by are things better. I think things are certainly better in some regards. One thing we're seeing is a little more realism on the part of junior companies. Up until fairly recently, frankly, my experience has been that too many companies that really are broke and have no money and no real prospect of advancing a project in the near term just were unrealistic about what they wanted for those projects. So now I'm seeing people more willing to deal on more realistic terms. So I think that's a good sign. And over the last few months, we've seen a lot more projects optioned, companies selling a project at reasonable prices. We're seeing more of that.
We're still seeing a lot of stop and go with projects, though.
Oh, absolutely, no question. I mean, at this price, at this price, you still need a pretty robust property to make money. And so I think too many properties are still marginal.
Do you think that there's almost a race to have the lowest all-in sustaining cost? There's such a focus on this, more than other years, I feel.
No, absolutely. Well, you know what you find in this business, you've been in it a few years, I've been in it a few years longer, But you get a theme, and every year there's a theme, and it lasts a year or two, and the theme definitely now is cutting costs, no question.
Absolutely.
But I think the major mining companies in particular have really gone overboard in cutting costs. And I'm not talking about cutting G&A, which is where not a lot of costs have come. I'm talking about companies that have eliminated in some cases, the whole exploration department. Well, the future of this business is exploration, right? I mean, mining, it's a renewable business, if you like. Every time you have a mine and mine something, it's a depleting asset. You've got to explore to find new stuff. And for senior companies to cut their whole exploration departments and then in other cases scale back on exploration, I think is going the wrong way. This is the time they should be buying assets.
Adrian, we've been to a few back-to-back mining conferences now.
Yes.
We were also in Florida together last week. Are there any projects that you're liking right now?
Oh,
specifically?
Yeah. Well, you know me. I like to look at companies, business plans, people. I'm less concerned with a specific project. So I still very much like the royalty model, frankly. And you look at a company like Franco-Nevada with over $1 billion in cash, they're in the driver's seat. And they're spending that money. They spent $900 million last year on buying royalties. They expect to spend $1 billion this year. This is exactly what companies should be doing.
Let's look at the gold price now. What's your point of view on it right now? You bullish, you bearish right now?
No, I'm bullish. I mean, I think we could get a little bit of a pullback or to and fro for the next few months. We're coming into a seasonally weak period, but I'm not talking about 900 or 950. I'm just talking about a little bit of a pullback from where we are. I think anytime you have a big decline, which we saw in gold from 211, not just a big decline, but a long, extended decline in any market, it's going to take time to overcome these resistance levels. So it's definitely going to take time for gold to build up momentum. But I'm bullish. I mean, if you look at the factors that have hurt gold over the last few years, they've really all turned, most of them, except for the dollar, they've really all turned in favor of gold. There's a lot of concern about the Fed raising interest rates.
Well, won't they? Exactly.
Well, I think the longer the Fed goes without raising rates, the more they're making it difficult to raise rates. Last year we had, when the unemployment rate gets to 6.5%, then we'll raise rates. What's happened? Well, the unemployment is good now, but we've got Greece and the euro, so maybe we'll wait. There's never going to be a perfect time. They're waiting for the perfect time. There'll always be an excuse and a reason not to raise rates.
You mentioned the dollar before, Adrian, but that's really the big one and the elephant in the room for gold.
Well, it is, but let's remember that this year in virtually every currency other than the dollar, gold has gone up. Last year, gold was up in most currencies other than, the Swiss franc and a couple of other smaller currencies. Gold was up in in terms of most currencies. So for most of the world, gold is going up. It's really only in US dollar terms, but it's not going up or not going up so strongly. I don't think the dollar can remain where it is for very long. Certainly, if you look at alternative currencies, the euro, Japanese yen, it's difficult to get excited about any of those. But the dollar's strength is beginning to have an impact on the US economy. It's already showing up in the trade numbers that are declining again to long-term record lows. Fed spokesmen are already talking about the strength of the dollar being an impediment to US growth. So I think there's definitely going to be a will on the part of the Fed to try to push the dollar down.
On that note, Adrian, thanks so much for chatting with us. Any final thoughts for investors?
My final thought is the same as I have every year, which is stick with quality. There's enough cheap stuff out there. Stick with quality.
Well, wise words, Adrian. Thanks so much for joining us.
Thank you.
It's always a pleasure. Thank you. And thanks for watching our coverage. We'll have more for you from PDAC or PDAC 2015. Stay tuned to Kitco.com.